There are many ways to evaluate a company as a potential investment. One approach is to take stock of the company's management. A management team sets the company's goals and the strategies they'll use to achieve them. A strong team can improve the chances that a young company will build momentum in the market. But a weak team can sink a company before it has a chance to really take off. Evaluating management is more an art than a science, and it isn't something every investor wants to do. Instead, they might lean on stock analysts to do the heavy lifting for them. But if you're interested in doing your own homework, there are 3 elements to look for in a management team: financial incentive, public communication, and experience. Let's start with financial incentive. The best management teams are those that act with integrity and in the interests of shareholders. Be on the lookout for executives who put their own wealth and success ahead of the company's. An executive's salary should rise as their individual responsibilities and the company's earnings grow, not as the value of the company's assets climb. Companies sometimes offer stock options and performance-based bonuses as part of an executive's compensation. However, it's important to check that those bonuses and stock options are tied to long-term goals. Otherwise, executives might have reason to overlook the company's long-term interests to reach their short-term bonuses instead. Thankfully, the internet has made it extremely easy to find information about executive compensation. In fact, public companies listed on Canadian and American exchanges must divulge the pay of operating officers and some board members within their annual reports. These reports can be found on the company's website or on electronic filing systems that store and distribute financial documents that are required for publicly traded companies. In Canada, that's SEDAR, which stands for System for Electronic Document Analysis and Retrieval. And in the US, it's EDGAR, short for Electronic Data Gathering, Analysis, and Retrieval. Next, let's move on to public communications. The main way investors learn about a management team is through its communication with the public. Some examples include quarterly and annual earnings reports, conference calls, press releases, and media coverage. But no matter the medium, a management team should always make it clear to investors how the company performed against its prior goals, what its future goals are, and how it intends to achieve them. It can be a red flag if messaging is infrequent, difficult to understand, or overly promotional. Lastly, let's touch on experience. Management teams at growth companies might be the inventors of its products or industry experts. Some studies suggest that founder-led firms tend to be more innovative than those which aren't. However, it can be more challenging to gauge how effective they might be if they don't have past management experience. In other cases, growth companies hire seasoned executives to help grow the business. In those instances, look at how long they spent with previous firms. Investors might want to take caution if a manager has held many positions in a short period of time. That might suggest they're more interested in hopping to their next career opportunity than growing with the company. Another thing to consider is whether they left their last company in a better spot financially than they were before they were hired. Now, there isn't a one-stop shop for finding this information, but the company's website is usually a good place to start. It's typically in the About or Investor Relations sections. Professional networking sites can also be sources of historical employment. And when all else fails, you can use your favorite internet search engine. That covers some of the qualitative criteria that investors can use to evaluate a management team. Now don't worry, number crunchers, there are some quantitative or numerical measures too. We'll cover those ones in more detail during our course, Intro to Fundamental Analysis. Regardless of which metrics you use, there unfortunately isn't an answer key that tells you whether management is good or bad, and solid management doesn't always mean the company will be successful or a good investment. But it can be one factor investors consider when researching growth stocks, so don't forget about it.